Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial world, and sometimes things get a little bit complicated. Today we are looking at Heritage Distilling Holding Company Incorporated IP strategy as they announced a significant change to their stock structure. This kind of announcement can have a big impact on current and potential investors, so let's break down what is really going on. Before we dive in, if you enjoy getting straightforward insights from these complex corporate documents, make sure you are subscribed. Also, we have a fantastic Discord community linked in the description below where we chat about all things finance. So Heritage Distilling Holding Company Incorporated, or IP strategy as they do business, has filed something called a third amendment to their certificate of incorporation. Essentially, they are making a big change to how their company shares are structured, and that big change is a reverse stock split. Now, what does that mean? It means for every 20 shares of stock you own before this split, you will only own one share afterward. Imagine you have $20 bills and you swap them all for $100 bill. The value is the same, but you have fewer bills. That is kind of what a reverse stock split does, but with company shares. The company says they are doing this as part of their overall capital markets and operating plan. They mention managing dilution, which means controlling how much each existing share is worth when new shares are issued, and also to continue complying with Nasdaq listing rule 555. Often companies do this to get their stock price up to meet minimum price requirements for exchanges like Nasdaq. A very low stock price can make a company look less stable or less attractive to investors. This change officially becomes effective on the 5th of November at 1:21 a.m. Eastern Time. Your stock should start trading on a split adjusted basis on the Nasdaq capital market when the market opens on that same day. The ticker symbol, IPST, will stay the same. However, the CUSIC number, which is kind of like a social security number for the stock, will change to 42,727 R203. Here is where it gets a bit tricky for some. They are doing a 1-for-20 split. So if you own, say, 100 shares before the split, you'll have 5 shares after. But what if you owned a number of shares not divisible by 20, like 50 shares? You'd expect to have 2.5 shares, right? Well, the company states they will not issue fractional shares. Instead, they will pay you cash for that fraction. That cash payment will be based on the closing price of the stock on the day before the split adjustment takes effect, the 4th of November, multiplied by the amount of that fractional share. So if the stock was trading at $1 per S-share and you were owed half a share, you'd get $0.5. For those holding shares electronically through brokers or in book, entry form your accounts will reflect these changes automatically. You do not need to send in any old stock certificates. This decision wasn't made overnight. Back on the 18th of September, the stockholders gave approval for a reverse stock split ratio anywhere between 1-for-5 and 1-for-20. Then on the 16th of October, the board of directors decided on the exact ratio, which is 1-for-20. Let's talk numbers. As of the 30th of October, there were over 183 million shares of common stock outstanding. After this 1-for-20 split, that number will shrink significantly to approximately 9.17 million shares. This reverse split also impacts things like stock options and other equity awards. The number of shares available under these will be adjusted proportionally using that same 1-for-20 ratio and rounded down to the nearest whole share. The conversion rates for preferred stock will also be adjusted, and warrants to buy common stock will have their exercise prices increased in inverse proportion to the split ratio. This means that when you exercise an option or warrant, the total cost to buy the shares will stay roughly the same as it was before the split. The company wants to reassure shareholders that their percentage ownership and voting power shouldn't change much. The main thing is that the number of shares decreases and the price per S-share is expected to increase proportionally. The rights and privileges of common stockholders will largely stay the same. To announce this significant change, the company issued a press release on the 31st of October. This filing incorporates that press release by reference. It is important to note that while this information is part of the filing, it is being provided in a way that generally means it is not subject to the same liability rules as other parts of the report under Section 18 of the Securities Exchange Act. And finally, as part of this filing, we have Exhibit 3.1, which is the actual certificate of amendment dated the 30th of October. This is the legal document that formalizes the reverse stock split. The report is signed by Justin Stiefel, the Chief Executive Officer of Heritage Distilling Holding Company Incorporated. Now, let's look at this from a higher level. This reverse stock split is a common tool for companies to boost their stock price and meet exchange requirements. It doesn't fundamentally change the company's value, but it can attract different types of investors who might be put off by very low stock prices. For Heritage Distilling Holding Company Incorporated, this appears to be a move to improve their standing on the Nasdaq. The company's plan for capital markets and managing dilution suggests they are looking at future fundraising or growth strategies where a higher share price might be beneficial. A key risk here is always perception. While the company itself doesn't change value, a reverse split can sometimes be viewed negatively by the market if it is seen as a sign of underlying financial weakness instead of a strategic move. Investors need to watch if the company can leverage this to improve its financial health and growth prospects. The adjustment to options and warrants also means that while the cost to exercise them remains same, the number of shares you get will be fewer, aligning with the split. In conclusion, Heritage Distilling Holding Company Incorporated is making a technical adjustment to its stock structure with a 1-for-20 reverse split. This is primarily aimed at meeting exchange listing requirements and potentially making the stock more attractive to a broader investor base. While the company's value isn't inherently changed by this move, it is crucial for investors to monitor how this impacts trading dynamics and the company's ability to achieve its broader financial and operational goals. Alright, that is our breakdown of Heritage Distilling Holding Company Incorporated's latest filing. What is your take on these reverse stock splits and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.